Let's bring in our next guest and talk about the markets. You might be a little queasy after seeing some of the losses in your portfolio this week. Gary B. Smith is here. Gary, it's great to have you on the show to talk about kind of what we've seen in the markets. I know you've been a little bearish about technology, and I want to ask you why. Because, man, when it comes to Facebook and Apple and Google, Alphabet, these stocks have been on a tear for the year. You're saying let's be careful. Why?
Well, if only, Cheryl, because of the run-up. It's not because of the companies in particular, although I'm always a little skeptical, to be honest, of technology stocks unless they have what I call a moat around them. They're be protected. Amazon's a great example. It's going to be tough to replicate Amazon, not because of their internet presence technology, but more because of their distribution centers, as opposed to a company like a Facebook, which is, other than their users, it's pretty easy to replicate. Remember, AOL had a lot of users. But back to your question, it's solely because of the run-up. These stocks, along with the market, have gone almost straight up without any kind of pullback. Just the odds say we have to have some reversion to the mean.
Double-digit gains on Amazon, on Facebook. These in Amazon as well. You've seen these companies just really take off. At the same time, though, the sell-off this week, I want to talk about that because a big piece of it seems to be tax reform. The effective tax rate for a technology company is about 18.5%. So with tax reform, if it gets finally passed and signed, these technology companies don't quite get the benefit that other companies would get, other sectors like the banks, for instance. What do you make of that argument as to why we've seen tech sell off this week?
Well, again, I think it's because of the run-up. I think you make an excellent point, though, about the tax reform. It's not going to affect a lot of those companies a lot. A lot of them have, like Apple, have a lot of money parked overseas. Maybe that's good for the economy if they pull some back. But I think there's a rotation, and the rotation is not, as a lot of people think, into finance. I looked at Bank of America. That's up 30% this year. I think the rotation should be to the sidelines. You billed me as being bearish right up front. I guess that's about as bearish as I'm going to be.
I've known you a long time, Gary. That's the problem. So we've had
I don't know if that's good or bad, Cheryl.
I think it's good. I love you. But let me ask you about something else that's happening in Washington, and it's this corporate AMT. A 20% corporate AMT, it was supposed to be completely eliminated. The House had it eliminated. The Senate put it back in. That could be an issue in general for companies, especially those that lobbied for this lower tax rate from 35 to 20. Now they're putting back in corporate AMT. Does that concern you at all?
It does, Cheryl. Not so much because of that, although that's concerning. It's because, once again, it looks like the GOP is trying to snatch defeat, as they say, from the jaws of victory. They've taken a very simple concept. Let people and corporations have more of their money, the economy is going to grow. It's become now this colossal tax reform plan that's hard to sell, it's going to be hard to implement, and it's going to be hard to explain to people, the average person out there, why this is good for them. And now, if you have the corporate rate essentially going back up a little bit, I'm trying to look for the positives here, and it's very difficult to find.
Gary, real quick before we let you go, we got the big jobs report coming out later on this week. You think it's going to be a market mover?
Yeah, I think it has been. I think the effects of the hurricane are now behind us. I think it's going to be a pretty solid jobs report. But, there's so many cross currents nowadays. We used to say, my God, the jobs report's going to be a big market mover. It is from about 9:30 to 9:35, and then we're on to the next Trump tweet or something like that. So, make sure you have very sharp focus for a few minutes and then on to the next thing.
You know what? The way that the environment is right now for investors, for just the average viewer, you can't blink. You'll miss something at this point, Gary. That's a good point.
If you want to be in, I think you either need to go two ways. Either put your money in the market and then walk away, or you have to watch it intently all the time.
Yeah, I don't know. I think I'm doubling down. Gary Smith, it's great to see you, Gary. Thanks for getting up early for us. We
Good
really
to see you,
appreciate it.
Cheryl. Thanks.